So kicking things off here, just go to you, Carson. What do you feel like is maybe what you view as one of the biggest risks to a retirement plan or a financial plan? In retirement, let's say in retirement specifically.
There's a handful. I don't know if I could pick one, any specific one over the other, but just to say one that we're all recently accustomed to is inflation. I think we all, and how we build into our plans here through our planning software, we build inflation into it, at a conservative rate. I don't know what it is, maybe 2.2% is a long-term inflation rate that we use, that we build into our plan. Specifically for healthcare, we build in like a 5.5% inflation rate, just because that's been historically gone up in price a lot faster. So the risk is we go through a very, very serious long-term inflationary environment. The past 2 or 3 years, the inflation that we've experienced has been short-lived. We reached 8 or 9% inflation at its peak. It's fallen back down to sub 3%. So we're at back down to a healthy long-term trajectory, but we still feel those impacts because it's not like prices have come back down. We haven't had deflation. Prices went up substantially and they've stayed there, and they're still increasing. They're just not increasing as fast anymore. So you've got to think that, over a couple of years, maybe it's since 2020, the cumulative effect of inflation is 25%. I could be off, but I feel like that's close to 25% cumulative effect of inflation. So think about it from a retiree. You're 70 years old. You've got, again, just for easy math, $1 million you're pulling from. And all of a sudden, if you used to live on 40 grand a year, now you're living on 48 just 2 or 3 years later. That's a 20% increase in your distributions is pretty substantial, because then you also have to pay taxes on that. Now your taxable distributions maybe are from 40 up to 48. So inflation has a serious impact. Now we can't assume that inflation is going to be X% in certain years and what the market's going to do in those years where inflation's there. But what you should do and how we plan is considering the fact that there will be inflation as time goes on, and that you are going to have to raise your standard of living, because we've never been in a long-term deflationary environment. So
yeah, I was going to say, I think it's important to have these considerations on the front end, because a good financial plan is going to account for inflation. So, you don't want to see nobody wants to see a 20% increase, but if you're planning for that on the front end, it becomes much more of a tolerable thing and a piece of the plan to weather should you see something like that, or like we have seen, because chances are once prices go up, they're most likely not going down. Any opinions are those of myself and not necessarily those of Raymond James. Expressions of opinion are as of this date and are subject to change without notice. The information contained in these podcasts do not purport to be a complete description of the securities market or developments referred to in this material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Every investor situation is unique, and you should consider your investment goals, risk tolerance, and time horizon before making any investment. Prior to making an investment decision, please consult with your financial advisor about your individual situation. Any hypothetical examples are for illustration purposes only. Actual investor results will vary. Raymond James does not provide legal or tax services. Please discuss these matters with the appropriate professional.